There are lots of things we're going to learn, and I hope I'm a much better investor a year from now because I've realized the way I've been doing it has been absolute dog crap so far.
A new holiday was born. A Festivus for the rest of us.
A Festivus for the rest of us. So Mo here is a lot younger than I am and a lot younger than Tim and I are. So he didn't really know what the Festivus thing was. It's a reference to Seinfeld. So our average viewer is 25 to 45 years of age. About that midway point is probably where you understand the Seinfeld. You know, Seinfeld debuted on my birthday in 1989 and had a 9-year run, incredible run. But there was an episode where George Costanza created his own, well, he talked about how he created his own holiday called Festivus because he was upset with the commercialization of Christmas and he was reaching up for a doll in a store for his son. And he was fighting with somebody else for it. And he said, and as I rained blows upon them, I thought to myself, there has to be a better way. So one of the aspects of Festivus is?
The tradition of Festivus begins with the airing of grievances. I got a lot of problems with you people.
Complaining?
It's called Erring of Grievances, okay. Right? So what you do is, in the episode, I think, if it's accurate or not, Frank looks at George's boss and says,
my son tells me your company stinks.
Oh, God.
What we're doing here is, you know, Ron Paul or Rand Paul every year comes with their airing of grievances about the government spending. We're going to come here and just talk about the markets. Mm-hmm. And it's not really a complaint session. It's more about where do we see it. Now, I want everybody to remember, the things we're going to talk about here are fundamentals that we talk about in all of our videos. You know, Mo and I have a process. The process differs. You know, if you watch our videos on how we evaluate stocks, they very much differ.
Yeah. A lot of times we disagree on revenue growth, profit growth.
And I actually tend to have the higher numbers than Mo does.
Yeah.
Have you noticed that?
Yeah. How the turntables.
How the turntables.
So that's The Office.
That's my generation.
That's his generation. And I love The Office too, how the turntables. But the point is, we want to learn from history. And most of my beliefs come from looking at a historical perspective. And I look at this market, and I look at it compared to other times in history. In our software, we have our community here. And our community is very, very active. But one of the things I post every single day is a stock market to GDP ratio. And every day I post it, I update it. The GDP only changes 4 times a year. Every business day, the stock market changes. And I have it based on this Excel sheet. And just like the software, this software is created because I used to pull an Excel sheet out and do my evaluations. And everybody would say, how do I get that Excel sheet? I'm like, well, I can't give it to you as part of a data feed, but let me build the software. So I post this every day as my own personal stock market GDP ratio. So my first airing of grievance is our overvaluation of 68.6%. Now, Mo, what's some positives about this?
Well, stocks will fall down and we'll be able to buy them.
They're also a lot cheaper than they were almost 2 years ago,
True.
a year and a half ago.
The other good thing, if you look at this from 1970, 1980, and you say, hey, the stock market's a lot higher now than it was back then. That is a good thing. Now it's overvalued like crazy, but it is a good thing that over time things do get better.
And even if stocks went to levels that we think it
falls in half.
If it falls in half, you still made a lot of money over decades. And that's
it shows
the key.
You that over the next couple of decades, you're still going to continue to make money.
Correct. And that's the idea behind all of this, is about one of my big errands and grievances is, guys, history is your guide. Does it mean that whatever happened in the past is going to happen exactly? No. History doesn't repeat itself, but it rhymes. What are some of the things that you have an issue with, Mo?
A lot of these people that are still pushing the crypto thing.
But that's the thing.
One big thing for me that really is driving me crazy.
That's a positive to me.
It's a positive, but
why do you think it's a positive?
Because it means that we still have more to fall.
Correct.
There's still people in this market. And even when you look at these other stocks, I mean, I saw Pinterest today, I think was upgraded and it had a 12% spike. I'm like, okay, there's still people in there that believe that you should be fundamentally buying Pinterest, which I completely disagree with. That's a good thing. We need to get rid of those people still. We're not at the bottom.
We've said this before in other videos. We need to get to the point where people have given up on Apple and Tesla. Tesla's down 30 or 40% in the last month or two.
Yeah, it's down over 50% this year.
And people have not given up on Tesla.
No.
To me, that's a great thing.
There was an article. There was somebody that came out today. They downgraded the price, but they still have a buy rating on it. We
need to get to the point where people are saying, if you want to make money, you got to get out of Tesla.
Yeah.
That's when you see guys like Mo and I invested in Tesla.
Something I really liked yesterday. This was down about 4% yesterday when the stock market was up. Stock market was up about 3.5% at one point. Even though it closed up 1%, something like that, we were still down about 4% on Tesla. That's awesome.
Yeah.
You don't usually see that. This is usually a leader to the top side.
Correct, because it's such a big component of the NASDAQ. Yeah. It's still a $500 billion company, even being down over 50%. Yep. The reason that's a positive to me is it shows we have more to go. Now, you might sit there and say, Paul, you want everybody to lose money? No, I want stocks to get to the point where they're a good buy, and where if you've decided to learn a process emotionally, part of your mindset, and then the actual buying process to understand buying investments at great prices, this is what you should want. Now, an Erring grievances I have is crypto.
Steve, I want people to lose money there.
And I hate to say it, but I do too, because I think crypto is the poster child of this bubble. I believe crypto is a thing we're going to look at 5-10 years from now and say,
What are you thinking?
What the hell were all these idiots thinking? And I'm looking at people say, you were the idiots. Like, it's literally gotten to the point where, like I said, people are telling me, no, Bitcoin is not crypto. And I'm like, okay. Now, what's the world in which crypto works? I think there is a world in which this works, but it's not the world that it is today. Yeah. It's got to be a regulated world. And it goes against the entire point of crypto.
There was a representative from California this morning that said it is the digital pet rock.
He said it yesterday in his
banking hearing or whatever it was. House Banking Committee.
It was funny to me because I tend to be a right-leaning person. I'm libertarian, but I was listening to the Democrats going, yeah, they get it. Now, they get it for the reasons I do believe in freedom and all that stuff, but the Democrats believe in more regulation. And I don't believe in no regulation. I just believe in not over-regulating. And I look at crypto. Go ahead.
And you kind of saw what happened when you have no regulation. You're kind of seeing it play out in front of you right now.
Yeah.
With SBF and Voyager.
Now, I do think that's because of how young the industry was. Mm-hmm. I wrote a really long in our if you look at this in our community.
I will say this though, it is a young industry, but it's interesting to see how quickly, now that things are starting to fall apart, how quickly the government is jumping on it. So they could have done this a while ago. They just chose not to because it was good times.
Yep. So yesterday I was sick in bed, and whenever I get sick, I get like really worked up. And I wrote this long thing in our community as an announcement I made, but it was basically the thing that bothered me. The grievance I have is, and this happens, the problem is I can't really have this grievance because it's all part of the process. The process of a bubble has to play out this way. Nobody asks questions when you were making money. But the second you started losing money, it's, where's the fraud? Where's the fraud? Guys, the difference between me and everybody else is I look for the inconsistencies up front, and I avoid it if I can understand it. Here's a prime example. Carvana versus Palantir. I love this situation. Carvana stock is down 99% or so. Palantir is down 80%. If you look at our videos from a year and a half ago, I was saying Palantir was not worth $40 to $45. I was at just around $5. It's currently $7.50, so it's getting close. But also in that time, Palantir has done, they've got cash flow positive 8 quarters in a row, all these other things that are positives. I'm like, you know what? Palantir could be a multi-bagger. Carvana is down 99% at one point. I can't value it to this day. And that's what I want you to remember. A stock that's down 99%, I sit there and say, I can't buy it because I have no idea what it's worth. I get tingles actually thinking about that, of the pride I have in myself to say, wow, my emotion and mindset is so good that I can listen to my process and say, 99% sounds like a great deal, but if I don't know what it's worth, is 99% still, is 1% still too much? I don't know. And Palantir, though, $2.3 billion in cash, net cash in the books, growing really high growth levels, really high gross margin, eight quarters in a row of positive free cash flow. Looking at it going, okay, I do see the path to a multi-bagger. And I do see the path. Are there hurdles still? Absolutely. And that's why you see in our videos that I put a higher return requirement for Palantir. It's not out of the woodwork yet. Is it doing great? Absolutely. But it's not out of the woodwork. It's not a Microsoft. It's not a Google. I have to have a higher return to go into Palantir. So part of my grievance is, guys, go in there and ask the questions up front. Don't just assume. In this post, I wrote about all my friends who, during the real estate bubble, didn't question the funds they were in because they just made a lot of money. But the second they lost all their money in that last deal, they sued the crap out of everybody. And I was like, that same process that go to zero was the process that got you to make a lot of money, which is no process at all. Greater fool theory. And that's why I avoided a lot of the mess and made a lot of money after the crash. And that's what I'm trying to explain here about my grievance.
One more I have.
Yeah.
I'm tired of everybody putting so much emphasis on the Fed, interest rates, inflation, this and that.
Well,
It's such a short-term thing. But I mean, so if it wasn't for doing the morning show, I wouldn't pay as much attention to the news and this and that because it's not that interesting.
Yeah.
But when you start reading stuff about like what Jim Cramer's saying, and he has a big audience, and every day he's talking about the Fed should do this. If the Fed does this, X will happen to stocks. And it's like, why are we talking about this day-to-day stuff? That's what bothers me.
Yeah.
I wish people just had a little bit longer term thinking.
Well,
rather than like today, 2:00, I have a lot of people that are saying, can you please do a reaction to it? It's like, yes, of course, but does it really matter in the long run?
So we react to a lot of videos and we react to a lot of earnings. And in our videos, we say, listen, the only time we like these earnings report is when they miss and people beat them up for what we consider to be a short-term problem. That's the point of this channel. We're trying to get people to understand that if you're buying a company for the long term, they're not going to hit every single time. But just because they missed by a couple pennies doesn't mean the stock should fall 20%.
Target is a perfect example.
Oh,
Remember
yeah,
when
Target was
the
great.
inventory issue, and people are like, oh my God, Target's done. It's going down 20%. It's like, really? Target's done. You think that they're not gonna come out of this even better in, call it 3 to 5 years?
And guess what? When Target fell, watch our video. I didn't immediately buy.
No.
I did the value. I'm like, okay, it's still got some ways to go for me to buy it. And that's my process. What I'm trying to teach. So one of the grievances I'm trying to do here is the big one for this channel is I'm not saying that my exact methodology for valuing stocks is the ultimate. My goal for you as a viewer is to say, this makes sense. Look at Gary, a guy I respect immensely. I've told Mo before, like, I'm really starting to question a lot of his process. Why? I think he's too anal. And I'll say that right now in the video, and I hope Gary watches it. He won't watch it. But tomorrow we have a call with Gary, and I'm going to say to him, like, Gary, do you ever think you just think too much about this? We once talked about Southwest, and what was his comment? Do you remember this?
Yeah, he goes, what are the credit card reward point structure?
Yeah, and I was just like...
When he said that, I was like credit card?
Yeah. And to me, I thought to myself, if that really affects the business, am I really buying a good business at a good price? Maybe I'm going to buy at a much lower price than Gary might, and he might find better value than I would. But maybe, and for me, I'm too lazy to go understand how their credit card rewards are going to affect them long term. Is it a valid point? Maybe.
Maybe it is. Maybe, but I mean,
I can make everything sound like a valid point.
Yeah.
Just like somebody told me recently, Bitcoin and crypto, if you read this book, it'll change your mind on it. I'm like, no, it won't. That's the thing. It's like, I can't, but what I'm trying to teach you here is there is a better process than just buying what you like at any price. And that's what I want to teach here. The emotion and mindset is correct. That is the correct, you should have no FOMO. You should want stocks to go down. And if stocks do go down, that you buy, which probably will happen, buy more. That's the most important part. How you value the stocks is the easy part. You can listen, how you assign your multiples and your growth rates and all that stuff. We can argue that till we're blue. Mo and I do in every single stock analyzer tool. We do it separately now, and we literally never agree on growth rates. I don't think we've once had a growth rate we go. In fact, today I think it was the first time we got the profit margin spot on two companies.
Yeah, today I can't remember which company it was, but we were in the closest range I think we've ever been.
Absolutely.
Low to high.
Yeah.
I think it was Adobe, or maybe it was Visa. Either way.
And my values tend to be higher than Mo's. And guess what? I don't sit there and go, darn, just Mo. I just go, okay. I think Mo's being too conservative. And Mo probably goes, Paul's being too liberal about it. Okay.
Lib.
Yes. The point is, we are both buying stocks for less than they're currently selling for, and we're okay with that.
Yeah, exactly.
But I want you to remember the Palantir and Carvana example. Carvana stock down at 1.99%. I said, I can't buy it still. And Palantir is down 80% going, okay. 90%, okay, now we're talking here. Because I see the path to the consistency. I react to valuations. I react to history. Going back to this, how does this become a lot lower? Two ways. Stock prices go down, GDP goes up. The good news is inflation is going to really help that GDP number skyrocket. Look where it was at the end of 2019. We have a $4 billion increase. The last time we had a $4 billion increase before that, we need to get to 17,700, September of 2014. So it took 5 years, and here it's been 3 years. So it's getting faster. And that growth is with inflation, will keep jumping up. But I look at history as my guide. One of the biggest things I learned in the last year was really focusing on return on invested capital and understanding it more and more and more. Because I think I was too conservative on companies that did a great job of reinvesting the money in the business. So my other grievance is, let's just remember this is a work in progress for all of us. Mm-hmm. I'm learning a lot every single month. That's why I read ferociously. And part of that reading is
Ferociously. I think it's ferociously.
ferociously?
Ferociously.
Ferociously. Fur?
Like feroce. Like ferocious beast.
So drop in the comments. I'm not going to Google it. So either way, there are lots of things we're going to learn. And I hope I'm a much better investor a year from now because I've realized the way I've been doing it has been absolute dog crap so far. And that's what's happened every so often for me that makes me go, I can't believe I thought this way. And that's the big thing. Now, the hard part is the art of it. How do you, and that's why I need to learn more about return on invested capital, because I think it's one of the most underrated metrics out there that can really help drive my ability to find great companies at great prices and get multi-baggers. So if you like this, guys, subscribe to the channel. Go check out our software at everythingmoney.com. We have a no-risk guarantee offer right now, 30 days. Try it out for 30 days. If you don't like it, email us, money back that you've spent, guaranteed, no questions asked. Thanks for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?